Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, we're going to talk about a couple reasons why the market is still crashing, and we're going to talk about this 2020 stock market crash so far. So stocks have hit their worst dip since 2008, and actually 11 years to the day, it's been the lowest dip since the 2009 recession. That was on March 9th or 10th, 2009. So we're going to talk about what caused the crash, two pretty big reasons, one of which you probably already know about, but the first one's actually pretty important as well. And then we're going to finish up the video with how I'm investing moving forward in this market, given these circumstances and given the environment. So without further ado, no, I'm just kidding. I know how you guys love when I say that. Further ado, let's just get right into it. So reason number one that the market is crashing is because oil saw one of its biggest drops in history. On Monday, it dropped 24% alone, and by the time of this recording, which again is afternoon on Wednesday, it is down more than 30%. So this basically happened between OPEC, Russia, and Saudi Arabia, to where these talks deteriorated. So they couldn't reach a negotiation. Basically, Russia was asked, or they rejected a proposal to cut their production by 1.5 million barrels of oil per day, and they said no. The reason for that is because 3 weeks ago, USA put sanctions on Rosneft. Rosneft, did I say that aggressively enough? Rosneft. I got some chest hair. Rosneft. They're a big Russian oil. That was terrible. Sorry, forget that. They're a big Russian oil company that are transporting Venezuelan oil. USA didn't like that. They're also hurting shale oil prices as well. So basically they put sanctions on them. So Putin reacted to Trump. Oh no, Trump, dislike the video. Don't, please don't. So Putin reacted to Trump and basically said, no, we're not cutting our production by 1.5 million barrels per day. So the Saudis then reacted to Putin. So basically, the Saudis cut their price per barrel by $6 to $7, and they actually increased their supply by 2 million barrels per day in terms of production. So what this led to is high supply, low cost, and low demand, basically sending the price of oil plummeting. So the reason for the low demand is why we're going to get into number two, which is familiar with you in this channel if you've been watching me for the past month and a half. So let's get right into number two. So reason number two is the pandemic, formerly known as, oh, just kidding. You thought I was going to get demonetized again. My last two videos where I even alluded to this got demonetized, so I'm not even going to go there. You know what I'm talking about. So this has already caused a severe decline in productivity, output, and demand from consumers all across the world. This truly is a global pandemic in a global economy. So the WHO, the World Health Organization, has officially declared this a global pandemic at the time of this recording, again, Wednesday afternoon, and it's affected many areas and arenas of life. Universities, some colleges have closed down their campuses and they're doing only online classes for the rest of the year. There's factories, people not working in them, travel, concerts, look at Coachella, look at South by Southwest. Conferences are being shut down. The actual conference about this pandemic has been shut down because of this pandemic. And this is causing many people to work from home, which is obviously affecting consumer and investor confidence, which is also affecting companies' balance sheets. Okay, so take a look at certain companies that have been greatly affected by this. Carnival Cruise Lines, Royal Caribbean, airlines, restaurants, Starbucks, etc., etc. People are consuming these things in these areas or these arenas and these industries a lot less because of this right here, okay? However, the biggest thing that this is causing is global uncertainty. So obviously right now there isn't a vaccine or a cure that we know of, and it's spreading more than ever, which is obviously causing uncertainty. So if you watch my other videos, you know that the stock market is simply just a discounting machine, meaning that it's taking in information today, projecting what it's going to do in the future, and discounting that price to the stocks or the market today, okay? So the reason this uncertainty is killing investors or consumer confidence is because we really don't know when this is all going to get resolved. So when you look at earnings reports 3 months from now, 6 months from now, 9 months from now, if you're looking at like a Carnival Cruise Lines, for example, they're probably going to be hurting for 9 to 12 months at least, okay? And some of these companies may actually be leaning towards insolvency. So I'm going to be making videos about the next couple of bubbles, corporate credit, corporate bonds. Sorry, I got something stuck in my throat. Maybe it's this right here. So ultimately, you guys, these are the two reasons why the market still is dropping, but there's definitely a ton more, which I will be making more videos about. So the last part of the video, I promised you I'd be talking about how I'm investing moving forward in this environment. So let's get right into that without further ado. So you're all dying to know, how am I investing in this market? So this is very simple. Right now, I am dollar cost averaging into an inevitable bear market, okay? So we've had about a 10.5, 11-year bull market. Everything was, roses, sunshine, peachy. A lot of people made a lot of money. I've been invested since 2006, so I wrote it down, wrote it all the way up, and now here we are in basically March of 2020. So I'm gonna be dollar cost averaging, depending on the type of account that I have. So for those of you that don't know what that means, dollar cost averaging is when you take a set amount in a set period and you invest that set amount over a long period of time. So take your 401k, for example. You get paid every 2 weeks. You have, a couple $100 coming out every 2 weeks. You're basically dollar cost averaging into your 401k. Now, the reason I'm not doing a lump sum versus a dollar cost averaging is because when you're dollar cost averaging into a bear market, it is typically better to do so because you're spreading your risk around. When the market is falling, dollar cost averaging makes sense. However, in most studies that have been done, if you just have a lump sum, heaven forbid you get an inheritance from a death or you come into a lot of money or a big windfall, lump sum all at once typically outperforms dollar cost averaging over time. There's been a million studies that show this. However, again, we're going into this right here. We are headed into a bear market, so that's why I'm dollar cost averaging. So if you saw my video on my M1 Finance dividend portfolio, I'm investing $230 every week. Rain, sleet, snow, sunshine, up, down, bear market, bull market, doesn't matter. That's why I'm spreading my risk across many, many years or even decades with that account. Now, lump sum, I do have a TD Ameritrade account for lump sum opportunities. So if I see something crazy like a Carnival Cruise Lines or, Delta Airlines, for example, I'm not saying I'm investing specifically in those. Oops. I will be deploying some money as a lump sum into stocks that I see are an opportunity. But they really have to truly be an opportunity for me to do that. Otherwise, I'm sticking with dollar cost averaging. If you agree or disagree with this philosophy, let me know in the comments below. If you got value out of this video, let me know in the comments below. Smash and destroy and brutalize the like button, or you can just click on it, like a normal human. Click the like button if you like the video. And also, please share this video with one friend. These take me a lot of time, effort, and I would really appreciate it if you shared it with someone. As always, everybody, thank you for watching and have a prosperous day.